Longhorn Corporation provides low-cost food delivery services to senior citizens. At the end of the year, on December 31st, 2021, the company reports the following amounts, and you can see these amounts for each line item or account in this table here. Okay, now the company had common stock of 25,000 at the beginning of the year. It issued 2,500 additional common stock. That's the value of the common stock. And the company also had retained earnings of 11,200 at the beginning of the year. All right, so the first requirement is to prepare the income statement. So here's your first hint. What are the items that go on the income statement? Well, an income statement contains revenues less expenses. So you want to identify the revenues, and then you want to subtract out the expenses. All right, now I've moved the screen down a little bit. Second requirement says prepare the statement of stockholders' equity for Longhorn Corporation. Okay, so here's a hint. Now, to me, a statement of stockholders' equity or a statement of retained earnings is a reconciliation type of statement. In other words, it starts with the beginning balance, and then you add in what increases it, and you back out what decreases it to come up with an ending balance. So you want to complete a schedule like this to solve this part of this exercise. All right, then the third requirement says prepare the balance sheet. Okay, now your balance sheet is going to take a format like this. Now remember that the total assets, this value here, is going to have to equal the total liabilities and stockholders' equity. So now you have to identify which of those counts are assets, which are liabilities, which ones are stockholders' equity. Now retained earnings is a stockholders' equity account. And remember, the value you're going to put here comes from the results you previously calculated on the statement of shareholders' equity. Okay? Also on the statement of shareholders' equity, you had to plug in the net income that you calculated from the income statement. So hopefully this points out that the order of the financial statements should be prepared in the following order. Income statement first, then the statement of shareholders' equity, or it could be a statement of retained earnings, then the balance sheet.